Labor Day falls late this year, and for the people who track back-to-school sales, that's only adding to the uncertainty over when and if consumers will be going back to the malls. And that is also creating uncertainty for investors. Laura Champine is a retail analyst at Cowen and Company. She is with us now, and Laura, I guess the only certainty is that we're probably going to be down for the year.
It looks like back to school might be down 3 or 4%, which is better than originally estimated by some industry groups who were looking for the business to be down about 8% year on year.
Is that because maybe people are feeling a little more confident?
We're pleased to see the consumer confidence numbers coming in a little bit ahead of expectations, but I guess the reality is kids do grow out of their clothes year after year, so it's almost a must-have. And I think also consumers are more willing to spend on their children than maybe on themselves.
My bank account is very well aware of how the children grow out of their clothes. All right, who is likely to do the best? And let me sort of add in a question, and how much is that dependent, in this case, on fashion? Are kids more willing to take what mom and dad buy than adults might be?
I think fashion is changing to some extent. One of the hottest brands for back to school, I think, will be Aeropostale. And when we do our surveys of teens and younger, what we're hearing is, why would I pay up for a higher price brand when I can go to Aero and buy 5 for the price of what one would cost me elsewhere?
And what else besides Aeropostale in terms of the lower priced end is going to be big?
The Gap is spending lots of money advertising its Old Navy brand, which intuitively should do well in times like these because their price points, when I run a comparison chart, I compare them against a Walmart or a Target, not one of the more trendy brands. So they're really hopeful the extra $25 million they spend on advertising this year, some on their jeans campaign, which is brand new, and some on Old Navy is helpful.
Now, are these companies sort of pedaling hard to stay in one place? In other words, if their sales go up, is that going to be good for the stock price, or is the overall sales decline going to weigh more heavily?
I think Gap almost needs to drive better top line than expected for the stock to work because they have said that they are making these investments to drive growth. Aeropostale has tough comparisons but is a cheap stock. Another company that I think will show some growth is Buckle. They do need to show some top line growth for the stocks to work from here.
Now, how much differentiation do we get in the various age groups, elementary school, middle school, high school, in terms of the retailers and in terms of their prospects? Is one age group going to do better than another?
We're seeing a lot of companies. There's a tiny company we follow up in Canada called Lulu that just launched a new kids concept today. Now, retailers often will launch new kids concepts when the growth is slowing in their existing brand. So there's a kids concept for Aeropostale. There's a kid concept for American Eagle. So we are seeing retailers going after an even younger child, but it seems that older teens are still willing to buy fashion brands.
All right, Laura, if you'll stick with us, we're going to take a quick break. We'll talk more about back-to-school shopping and what we learned from the back-to-school shopping season that we might apply to the holiday season ahead. We'll explore that and find out which stocks have holiday magic next. Back to school season turning into a trip back to the drawing board for retailers. Let's look at department stores versus some of the specialty retailers. Laura Champine's with Cowen and Company. A lot of parents just head to the mall, to the big department store to outfit their kids, especially younger ones who don't necessarily have the fashion sense, say, I want to go to this particular store. So what's the outlook for department stores this back-to-school season?
Department stores are almost as promotional as we've seen them over last holiday. So we're seeing significant price cutting at department stores, a cleaned up assortment. A lot of the inventory positions have been cleaned up, but I'm seeing lots of brands that I'm used to only recognizing at department stores in off-price stores, like a TJ Maxx, like a Ross, like a Marshalls. Not a great trend from Macy's and Saks.
So you can get more fashionable merchandise at the lower price stores now. That has to be probably good for their sales, for their stocks as well.
Their stocks have had a nice run, and a lot of people are second-guessing how well they'll do if the economy does recover. But this will be their first holiday season with a lot of those new brands. I believe that TJ Maxx had a quarter when they opened 600 new vendor doors in one quarter alone. Those brands, I think, will stick with them through the holidays, which should give them the best holidays they've ever had.
Anybody in the department store space worth buying at this point, or is it all kind of a sit back and hold?
You know, it's tough to tell. I would wait and see on most of the department stores.
All right, waiting and seeing is an issue for the holiday season as well. Holiday orders are placed very early. We're past that season now, where people have put in holiday orders, and yet the economy is starting to pick up. This must be a real crapshoot for the department stores, for the retailers this year, not knowing how strong the economy is going to be, not wanting to get stuck with excess merchandise, and not wanting to be unable to take advantage of a rebound.
There are some exceptions, but most retailers have actually, for once, really controlled their inventory levels. So I think they learned a lot from last holiday. My guess is from a profits perspective, with tighter overhead, with more cost cuts, with pressure on the suppliers, leaner inventories probably than we've seen in years, we're positioned to see better profits, even if sales are not robust over the holiday season.
If sales do pick up, if sales are a little bit better than expected, that would suggest maybe we won't have to see as much discounting if we have inventory so low.
That's the best of all possible worlds. Fewer markdowns. Some of the retailers we really like in Aeropostale, have new systems in place, so they're already reducing the amount of markdowns even in this environment. That really tees them up nicely for the holiday season.
Now, in terms of the holiday season, same retailers that we talked about for back to school going to do well, or does that broaden out because you bring in adult shopping as well?
It does broaden out, and some of the stocks we've seen bid up are the turnaround stories who had abysmal holidays last year, like a Williams-Sonoma, like an Ann Taylor, like a J. Crew. I think some of those stocks have gotten ahead of themselves, though. So I think it makes sense to stick with some of the names that have momentum and even take a look at the dollar stores. I think that the consumer is still far from out of the water here.
Now, when you get down into the dollar store, I know you say we're getting better merchandise at the TJ Maxx's and Marshalls and people like that. What is it a fashion? Is there still a fashion issue? Are people reluctant to go there because they want the brand names and aren't sure they can get it at the discounters? Or is it all price right now?
You know, there's a lot of controversy on whether or not there's been a trade down and how powerful that has been. I actually think that the high-end consumer is waiting. I'm not sure that they're trading down. I just think they're waiting to make that big-ticket purchase. I'm not sure that a consumer with a six-figure income is going into TJ Maxx. It could be that the TJ Maxx customer is just holding up better because it is a $15 average ticket, maybe $12. That's a little more durable, a little more repeatable than the high-end.
Well, what's happening to the higher-end department stores, the people such as Saks, Neiman Marcus, people who depend on the folks with the six-figure incomes?
Right. I mean, I think they're pulling back on costs. I think they're positioning themselves for another uncertain holiday season. I think they are trying to be lean on their inventories, very lean in staffing. It'll be interesting to see if they really need to ramp up staffing if they get underserved to their customers.
All right. I've only got less than a minute left. One company that you would invest in the retail space right now?
If you've got a longer time horizon, there's a company called Buckle, BKE, selling fashion brands trading at 9 times our number for next year. Heavily shorted stock, so it will be a volatile stock. Very tough comparisons, but their returns on invested capital are in the mid-30s. If you can buy a company that's in that good of a business in less competitive markets at that price, I think that's pretty compelling.
And what's your target for them?
We don't publish price targets, but I think you can say it's by far the cheapest, and we have some stocks trading at double the multiple with less positive fundamentals.
All right. Thank you very much, Laura Champine, for joining us today.